All right, welcome to this explainer. Today we are unpacking the completely fascinating current state of CME Group. Now, if you follow global finance, you already know CME is an absolute titan. I mean, it's the world's largest derivatives marketplace and a central clear that quite literally keeps the gears of the global financial system turning. But, as we're going to see today, even titans have incredibly complex stories. So let's just jump right into this with a number that should make any investor do a total double take: 33. That number represents CME Group's 33 consecutive quarters of year-over-year market data revenue growth. We are talking about nearly a decade of uninterrupted success here, which recently culminated in a record-breaking $238 million in just the second quarter of 2026 alone.
Here is our roadmap for today. We'll start with the CME valuation paradox, then examine the Wall Street divide, jump into the perpetual futures battle, check out their rapid-fire product innovation, and finally wrap up with their new era of leadership. Basically, we're going to unravel the mystery of how a company posts its best financial quarter in history while its stock somehow lags behind the broader market. Part 1. The CME valuation paradox, record results versus price. What's absolutely wild here is the sheer magnitude of CME's financial outperformance. Wall Street's consensus for their Q2 adjusted earnings per share was $2.91, but CME, they delivered a very solid $2.99. During that quarter, they pulled in $1.7 billion in revenue and $1.1 billion in operating income. It was so good that CEO Terry Duffy actually came out and called the first half of 2026 the strongest in the company's entire history. And the trading volume driving those massive revenues? It's equally staggering. Average daily volume reached 29.8 million contracts in Q2. That is the third highest quarterly volume in the institution's history. Equity index volume alone was up 13%. And they didn't just stop there. They carried that massive momentum right into July, hitting an all-time monthly record of 27 million contracts per day. So here is where things get really weird. It's this massive contrast. On one hand, you have these huge financial wins, right? 33 quarters of data revenue growth and a record EPS. But on the other hand, as of August 26, 2026, CME's share price was sitting at $280.98. That means the stock was actually down roughly 3.8% for the year, completely underperforming the S&P 500, which was up over 13% at the time. You really have to ask, how does a company break its own historical records but fall that far behind the market? Which brings us to part 2, the Wall Street divide, the bull versus bear debate. Wall Street is completely split on what to do with this stock right now, and the spread in analyst readings is massive. You've got Piper Sandler giving it an overweight rating with a $329 price target. But then you look at Barclays sitting at a hold, and JP Morgan holding a firm sell position with a $250 target. The consensus average sits at $283.07, which is a mere 4.5% upside from recent prices. We even saw Deutsche Bank issue a downgrade to hold recently. Despite all that, the bulls remain incredibly optimistic. Just listen to this quote from GF Securities. They initiated coverage by calling CME a systemic infrastructure hub for the global dollar pricing system. Why? Well, because CME controls roughly 50% of the global interest rate futures market. GF Securities points to that sheer dominance, along with CME's light capital business model, as undeniable proof that they are just a powerhouse. Let's move on to part 3, the perpetual futures battle, the regulatory wildcard. To really understand what's spooking the bears, we need to understand the jargon for a second. So, what are perpetual futures? Basically, they are derivatives with no expiration date. They allow traders to maintain a position indefinitely without having to roll contracts over, and they permit leverage as high as 50 to 1. Yeah, 50 to 1. In May 2026, the Commodity Futures Trading Commission, or CFTC, approved these perps for rival platforms like Kalshi and Coinbase. And that decision, it sent CME stock tumbling on fears of long-term competition. But CME definitely didn't just sit back and take it. CEO Terry Duffy made his stance crystal clear, saying, "I'm always up for a good battle. I've never shied away from one." And he meant it. In June, CME filed a lawsuit against the CFTC, claiming the regulator completely circumvented Dodd-Frank rules by not classifying these perpetual futures as swaps. Of course, neutrally speaking here, the CFTC fired back, dismissing the lawsuit as frivolous and stating they look forward to having it thrown right out. So the battle lines are firmly drawn. And the broader market is totally split on this regulatory wildcard. The bull view, which is held by analysts at places like KBW and Raymond James, argues that this threat is way overblown. Their logic? 94% of CME's volume is institutional, and those huge clients currently show zero demand for perps. On the flip side, the bear view, voiced heavily by JP Morgan, fears that these perpetual futures could eventually expand into other asset classes and slowly eat away at CME's core legacy franchise over time.
That takes us to part 4, rapid-fire product innovation, adapting to the future.
CME's counteroffensive in the market has been relentless. Just listen to this pace of innovation. In July 2026, they rolled out single-stock futures, allowing 23-hour trading for world-shaping companies like Apple and SpaceX. By August, U.S. Zinc futures were trading with massive industrial players like Glencore and Trafigura. September brought 24/7 silver trading, perfectly riding the coattails of their $219 million success with 24/7 gold. And going into Q4, they are aggressively stepping into green energy with wind power futures. But what's really fascinating, and honestly super futuristic, is their October launch. CME is launching AI compute futures with Silicon Data. Let that sink in. They are literally allowing market participants to hedge GPU rental costs by turning AI processing power into a tradable commodity. It's just a brilliant illustration of how CME can adapt its traditional exchange model to cutting-edge tech shifts.
Let's look at part 5, new era of leadership, a historic transition.
All of this intense innovation and conflict is happening right as a major internal shift takes place. CEO Terry Duffy will actually step down on March 1st, 2027, transitioning into the role of executive chairman. Duffy has steered this massive ship for over a decade, leading the company through unprecedented record-breaking financial growth and, of course, these current high-stakes legal battles. But now, he's getting ready to pass the baton. Taking over the reins will be the current president and CFO, Lynn Fitzpatrick. This is a huge milestone appointment, as she will officially become CME's first female CEO. It really signals a brand new chapter for this legacy financial institution as it heads into 2027, facing some very unique regulatory challenges and incredible technological opportunities all at once. Okay, let's pull all these threads together to summarize what we've learned today. We've got an institution posting record financials with nearly a decade of uninterrupted data revenue growth. Yet, somehow, the stock is trading at a discount amid some really heavy valuation debates on Wall Street. The CFTC lawsuit over perpetual futures represents a serious regulatory wildcard. But meanwhile, CME isn't slowing down. They're rapidly innovating across AI, green energy, and 24/7 trading. And the whole thing is culminating in a historic CEO transition scheduled for early 2027. Which brings us to our final thought and the ultimate question. Is this traditional financial giant nimble enough to dominate the future? Can CMA's aggressive product innovation and sheer institutional dominance actually outpace these regulatory threats and the lingering doubts of Wall Street bears? That is going to be a fascinating story to watch unfold. Thanks so much for joining me on this explainer today. Until next time, keep exploring and keep learning.